Good morning, traders. Today is Tuesday, the 20th of April, 2021. My name is Neville Hornsey, market analyst with YouTrading. And today I'm going to be talking about the British pound versus the US dollar, but we'll also look at the dollar index and the euro pound. So if we go into the charts, I'm going to start with the dollar index. You can see here that yesterday we broke through some decent support. And we've now ended up in this little balance area just above the $90.7 area. We could find that this is support and this rising trend line also acting as support. And then we could go back up to test the 200 period moving average here. However, when we were looking at the dollar rising into this sort of 200 EMA, it was compressing, and it was because of this period here where we had a balance area carved out from the end of July 2020 to the end of November 2020. It was always going to be difficult to get through this period, and essentially we got to the middle of that balance area and then rolled over. If you are long because of the higher swing highs and the higher swing lows, then the lower this gets, if we do test through this sort of little vacuum of volume here, then your stop's probably going to be around the 89.6 sort of level, and you'll probably see an acceleration to the downside as traders get nervous and puke their position here. So what we really want to do, or what we really want to see for the dollar bull case, is for this little balance area to hold as support, and then for prices to rise and recapture above this sort of support, which will now become resistance. The $90 level is obviously key. And if we break it below that, and then we are thinking again about this sort of period of time where we had a balance area carved out in 2018. We did actually feel that prices could come down and test these lows, as we were coming down through here, through the end of 2020 into 2021. But the sort of, the buyers were still sat here, and they took it back up to this balance area. So now we've tested this low and this sort of high. It does look as likely to come back down and test these lows as anything else. There was very little news yesterday to bring dollar crashing down. And obviously nothing ever goes in one direction like solely. So we could come back up to test the $92 level and then fall back down. I don't think it's going to come straight down like a rock. I think these sort of little zones are going to act as support before we get back down below 89. So that's kind of like the dollar. If we now go to the pound versus the dollar, again, we're in a trading zone, if you like, that was carved out just before the Brexit referendum. Then we had the Brexit referendum itself. British pound obviously collapsed then. Then we sort of ground down to the lows around 1.21. Found some support, and then we rose up a little bit higher. Got to sort of price action, in this sort of area of uncertainty before the referendum, that we had things like interest rate hike expectations for the Bank of England. We had Brexit withdrawal. We had all sorts of amendments going on within that scenario in Parliament. Obviously, we collapsed down to the point where we had COVID-19 pandemic, found the low there, got lots of stimulus pumped into the system. Everyone has been watching this grind a lot higher, especially recently. The end of 2020, it was just really grinding higher. We found resistance at the sort of 2018 swing high, and now the buyers are still here, so we're back into it. This is like the second time of asking. So if you are bullish the British pound versus US dollar, because you think the dollar index is actually going to come down and test these lows below 88, then you'll be looking to see if you can get on a long trade as we take out these sort of swing highs. But a lot of traders will wait to see if we can actually get through this period of consolidation and then pop out this side, retest, and then wait for the continuation. It definitely feels like it's going to be a bit tricky to get through this sort of zone here. On a sort of more near-term basis, we've taken out some swing lows and some swing highs. And we're currently at the swing highs where we have GDP data, balance of trade data, and Bank of England interest rate decision data. It's quite possible that we take out these swing highs and then come back down to test these swing lows here. This double bottom here always feels like there's going to be some stops waiting there to be taken. And that was from the UK unemployment data, UK inflation data, and some decent market manufacturing services data. That swing low here was tested once before. There were buyers there. I don't think the buyers would be there again if they were asked for the second time. But obviously on the sort of weaker dollar, we know we've got to concentrate on this sort of swing high here from the 24th of February. If we get above there, then we are really starting to motor up into these sort of swing highs here, and we could be trading 1.44 in the near future, assuming the dollar keeps coming down. Okay, so if we are going to be looking for longs, especially at intraday, then it's probably a good idea to have some sort of near-term strategy. For now, if you have, say, 3 EMAs on your chart, you could have the 60, the 21, and the 8. And if they're stacked up on top of each other, so blue is 8, green is 21, red is 60, if they're sort of in that order, at any time the price gets above the 8, you could be looking to take a long position. If you want a little bit of confirmation, you could wait for the MACD to switch from being a bearish sort of signal here to a more bullish. So when the MACD histogram flips over the signal line to being green, and this scenario is happening as well, then yeah, you could be capturing quite a few pips. And every time the price comes below the 8 EMA, you close out, take your profits, and then wait for price to get back above. And then you could capture this sort of big impulsive move. But also, if price does get a little bit tricky, you want to be taking momentum longs. So if the EMAs all stack up correctly, and you just wait for this confirmation sort of filter, if you like, from the MACD, then you shouldn't get chopped up too many times. And if, for whatever reason, the daily does go bearish, then you should be able to capture quite quickly a turn in the market when the EMAs sort of flip to the downside. But for those that want to keep an eye on the British pound, you should also keep an eye on the euro. So the euro versus the British pound is actually looking quite bullish. It's taken out this swing high from the 24th of March. It did it in a very impulsive manner, and now we're doing like a little correction. We're currently sort of trading at the 50% of this impulsive move. So if the euro does find support around here, or the 61.8 at 0.857, then we know that is one reason why this could roll over, because generally the cable trades inverse to euro versus the pound. For the euro to go higher, you kind of want the dollar index to come lower, because this, the dollar index itself is heavily weighted towards the euro. So if the euro versus the US dollar is going higher, then you expect to see the dollar index coming lower. If the dollar index is coming lower and the euro is going higher, then this can add support to the euro GBP. So just keep an eye on the dollar, euro GBP, and then the current sort of intraday momentum on cable, and just be aware that there are some sort of significant sort of trading ranges that we're in now, and prices could get a little bit more sticky here. But if we do roll over, then you should be able to keep on the right side of the trend. Okay, I hope that was interesting and useful, and I'll catch up with you again soon.